Welcome back. We are now starting with Unit 2.2, Life Risk Policies. Alright, let's have a look at the learning outcomes that we will cover in this session. By the end of this section, you should be able to describe the general characteristics, the terms and the features of financial products in a life risk policy. Explain the typical fee structures, the charges and other costs associated with a life risk policy. Identify the general risks associated with investing, purchasing or transacting in life risk policies. Validate the appropriateness of a life risk policy for different types of clients and or client groups. Right, let's have a look at the definition of life risk policies. The Insurance Act 2017 deals or defines a life risk policy as follows. A life policy means a contract in terms of which a person, in return for a premium, undertakes to A. provide policy benefits upon and exclusively as a result of a life event, or B. pay an annuity for a period and includes a reinsurance policy in respect of such a contract. The first part of the definition of a life policy covers life risk policies, whereas the second part refers to a life investment policy. A life risk policy provides risk benefits only. A life risk cover is long-term insurance that provides financial protection in the wake of major life events such as critical illness, disability, retrenchment, and or death. Right, a whole life policy. The general characteristics, terms, and features of the financial product in a life risk policy. A whole life policy offers a guaranteed death benefit or payout, which remains the same for life. The policy has a face value, and one pays into the policy until such time that the cash value matches the face value. If the policyholder dies, the beneficiary receives the face value of the policy regardless of the insured's age or what the policy cash value would have been. The premiums are payable for the whole of the life insured's life. A whole life policy with an investment option can be surrendered at a fee so that the insured access the cash of the policy during their lifetime. This was a later addition when they added an investment account to a life type of policy. Whole life policies can be offered as a level premium or an escalating premium basis. The escalating premium makes the policy cheaper at inception, but with premiums increasing at a specific percentage every year. A level premium policy maintains obviously the premium for the rest of the term, which is a life term. Right, how does the claims work on a life policy? You need to fill in a fully completed declaration by the claimant. In this event, I assume it won't be you, but somebody that claims against the policy because you did. The beneficiary complains a death complaint form. Claims form. The legal guardian must complete this form for a minor beneficiary. A certified copy of the death certificate. The police report was completed by the investigating officer in the case of an unnatural death. That would be in a motor car accident. A letter of executorship if the nominated beneficiary is the estate, or if there is no beneficiary nominated where the life assured and the owner is the same. And then obviously this policy is going to pay into the estate of the deceased. A certified copy of the deceased identity document, certified copies of the beneficiaries and executor identity documents. If the beneficiary is a minor, we require a certified copy of an unabridged birth certificate, which reflects both parents' names. A copy of the claimant's bank statement or a cancelled check as proof of the bank account, less than 3 months old, with an official bank letterhead and with a bank stamp on. If the estate is payable, then the insurer will need the estate's bank details. The DHA 1663, the registration of death and stillbirth form, can be obtained from the doctor who certified the death or from the undertaker. Right, term life policies. Now, different to a whole life policy was over the whole of the life of the person. Obviously, a term life policy would only be over a specific term. This life assurance offers cover at a fixed rate for a selected period. If the policyholder passes away during the selected time frame, the beneficiary will be paid out the lump sum. The simplest form of a term life policy requires the insured to make equal premium payments throughout the term. It is known as a level premium policy. All life term policies are all level premium policies. Level cover policies provide a fixed amount of cover throughout the life of the policy term. All life 10-year and or 20-year level cover policies are examples of this type of policy. Right, term life policies. If we look at the characteristics of a term life policy, term insurance products provide for cover over a defined period. The cover is from the policy's inception date until the end of the term period. At the end of the agreed term, the policy will then terminate. One is allowed to reapply after the end of the term, suitable for young adults whose liabilities are short-term, like a personal loan for 5 years or a car finance, let's say over 6 or 7 years. Credit life policies are good examples of term life insurance. Credit life is an insurance cover that a consumer is compelled to take up when applying for a credit card and or a loan. Right, claims procedure for a life insurance policy. Proof must be submitted that an individual has lost their job or source of income in case of credit life as a result of the event covered in the policy. The claims personnel would attempt to establish if the insured knew about the pending income job losses when they took out the policy and will not be covered if the insured knew, and bank statements confirming their bank details would be necessary. Right, let's just look at disability policies and the definition of a disability policy. A disability policy is defined in the Long-Term Insurance Act as a contract in which the insurer undertakes to provide a policy benefit upon a disability event. The disability event means any event resulting in A, the loss of a limb or sense organ or the use thereof by a person, B, a person becoming so physically or mentally impaired whether they are totally or partially or temporarily or permanently that the person is unable to, firstly, continue his or her employment or own occupation, profession or trade. Secondly, participate in any employment, occupation, profession or trade that is reasonably suitable to that person, given amongst other matters his or her education, his skills, her skills, experience or age, and thirdly, carrying on the functions required for a normal activities of life. In practice, disability policies are issued either as long-term or as short-term cover. Right, what's the benefits of a disability insurance? Lump sum disability insurance is payable on permanent disability. Income disability insurance provides monthly income benefits against the loss of income if a member cannot work due to disability. Managed income disability insurance provides for monthly income benefits and disability management that complies with the stipulations and the spirit of the Labour Relations Act. And critical illness and severe illness insurance provides a lump sum payout on the diagnosis of a critical or severe illness as defined for the standard and comprehensive product solution. Right, claiming for disability benefits. The declaration by the claimant and the doctor's statement plus forms are to be completed by the treating specialist. Copies of the report or test results confirming the diagnosis. A copy of the claimant's identity document. A copy of the owner's identity document if you are not the policy owner. a certified copy of the accident report if the claim event is related to an accident. Let's say in a motor car accident, you got injured so bad that you lost the use of your legs and you're disabled. A copy of the claimant's bank statement or a cancelled check as proof of the bank account details. And this must be less than 3 months old. And it must be on an official bank letter and with a bank stamp. Right, let's look at dread disease, also known as critical illness cover. Dread disease cover is an insurance benefit that offers a lump sum tax-free payment if you are diagnosed with a severe illness. Most dread disease benefits cover cancer, stroke, heart attacks, coronary artery bypass, graft surgery, with these 4 illnesses accounting for between 70 and 90% of all the claims. However, cancer remains the leading cause of dread disease claims, with cancers and tumors accounting for around 30% of all severe illness claims. According to the 2014 National Cancer Registry, breast cancer is the most common cancer in women of all races, with a lifetime risk of 1 in 27 in South Africa. Most insurers offer dread disease cover as either a standalone or a supplementary benefit to your life cover. As a standalone benefit, it is particularly attractive to those who do not want or require life cover. Most insurers also provide the option of purchasing dread disease as a term cover, which ceases at, let's say, the age of 65, or as a whole life cover that continues for the duration of your life, if your premiums are being paid. Right, let's just look at some of the dread diseases. Common dread diseases that are covered by these policies are, but are not limited to, heart attack, chronic coronary heart disease, and stroke. Those are the 3 major ones. Major transplants like kidney transplant, heart transplant, lung transplant, liver transplant, pancreas or bone marrow. And then in the case of paraplegia, blindness, cancer or kidney failure. Right, features of dread disease policies. It can be used as a form of gap cover for shortfalls in a medical aid. No medical tests are required. Normally one must disclose if there are any pre-existing conditions that the insurer does not cover, like an HIV test might be required. Some dread disease policies do not have a waiting period. One is covered as soon as the insurer confirms the cover. Payout as a lump sum amount that is tax-free. Payouts are calculated as per the Standard Critical Illness Definition Project, or SCI-DEP. Staging applies only to certain illnesses. Right, benefits of a dread disease policy. Premium waiver. If the policy holder becomes disabled, the premiums of a dread disease policy will not be paid for some time. Some insurers have what they call a premium waiver for 6 months following a successful claim. Other insurers have an automatic cover of the policyholder's minor children. Right, please note, most insurers now have a whole life policy or term policy where all other risks like disability, retrenchment and disease can be incorporated into the cover. These are then often offered as accelerated benefits, meaning that the benefits are available to the policyholder during their lifetime for as long as the insured event under one of those sections has arisen. Some policies also include funeral expenses as a benefit in the premium that the client is quoted. A simple whole life or term life policy generally offers death benefits only, but insurance companies are changing that traditional approach to suit different client needs. Right, how do you claim for a dread disease claim? The declaration by the claimant's doctor's statement forms are to be completed by the treating specialist. Copies of the reports or test results confirming the diagnosis, a copy of your identity document, a copy of the owner's identity document if you're not the policy owner, a certified copy of the accident report if the claim event was caused by an accident, and a copy of the claimant's bank statement or cancelled check as proof of bank account details, and this must be less than 3 months old and on the official letterhead and with a bank stamp. Right, let's look at income protector insurance. Income protection is a long-term insurance policy designed to supplement income following a loss of income due to an injury or an illness, retrenchment, or loss of income from a business. If you're a business owner, the level of income cover is based on a percentage of your income, typically between anything from 50% to 75%, but can be increased to 100% with what they call top-up type income protection benefit structures. The following is required when claiming for an income protector benefit: a copy of the medical certificate from a medical specialist that confirms the injury or the illness and the exact period that you were put on sick leave. There may be further requirements depending on the period booked off, as well as the medical condition. Settlement letters for disability or sickness income received from other policies, and a copy of the claimant's bank statement or cancelled check as proof of banking details. Again, less than 3 months old with an official bank letter and with a bank stamp. Right, let's look at the typical fee structures, changes, and other costs associated with life risk policies. Premiums for life risk policies are normally influenced by a client's risk factor and are determined through the process of underwriting. Underwriting is analyzing a client's risk profile and deciding whether to accept or decline cover based on the potential client's risk. The higher the risk a potential client presents in a profile, the higher the premium the insurer charges for the cover. The risk can sometimes be so bad that the insurer rejects cover. Some of the underwriting factors used are as follows. They look at smoking habits, so you get penalized for smoking, lifestyle, profession, more premiums if a job is classified as high risk, for example, mining and firefighting, health, people that are obese, family with health history, pre-existing health issues which attract higher premiums. Age, the older one gets, the more expensive your premiums will become. And lifestyle, which includes high-risk activities like skydiving and other extreme sports, will attract high premiums. Right, what other risks do we have when we take out life insurance policies? Inflation is one of the general risks which has a rise in prices, and policies with cash values may lose their value over time, and policyholders could get close to nothing when the policy reaches maturity stage or when the beneficiary makes a claim. Now, it sounds terrible, but let's say that 20 years ago you were promised 100,000 payout. Now, 20 years ago, 100,000 was a lot of money. Today, when you receive that 100,000 payout, due to the eroding effect of inflation, 100,000 isn't a lot of money. So that's what we mean by it loses its value over time, which means that you've got to constantly look after your policy and obviously adapt it to suit your current needs. Right, the current impact of emerging disease on life insurance products, as we have seen in 2020 with the coronavirus pandemic, which was a global disruptor in the insurance industry sector, the biggest financial losses for any insurer is that they must pay for a claim arising from the death due to a newly emerging disease that they didn't plan for or didn't underwrite. The policy exclusions were never clear about how such cases will be treated. Insurers must therefore rethink their processes to deal with potential increases in such claim volumes like they've experienced in 2020-2021. Those that have excluded cover for epidemics also risk reputational risk, as clients normally get frustrated by such disclosures at the claim stage, and then they might not invest with such a life assurer. A report by the Financial Times said that while experts agree that while many insurance policies may pay out, quite a few policies also have deliberate exclusions for epidemics and pandemics. The experts added that it is too early to say how much the virus outbreak will cost the insurance industry. Two of the insurers operating entities in China, Alliance China Life Insurance and Alliance Yingdong General Insurance, have also launched some temporary emergency measures for the convenience of their customers. These measures including implementing a fast-track claims process and removing restrictions on designated hospitals and drugs, and waiving deductibles and eliminating waiting periods during the pandemic. Right, impact of fraud on life insurance. Insurance fraud undermines the system as fraudulent applications and claims deplete the funds paid in by many honest customers to cover genuine losses. It also impacts on society in the general because insurance fraud can be used to fund criminal activities. It is likely that if you have submitted an intentionally fraudulent claim, that your policy will be cancelled. This not only affects your relationship with your current insurer, your claims record may be shared with other insurers, reducing your chances of ever being able to take out insurance in the future. According to the Global Economic Crime and Fraud Survey in 2018 published by PricewaterhouseCoopers, South Africa's rate of reported economic crimes is 77% compared to a global average of only 49%. Insurance fraud impacts consumers by increasing premiums and consumer goods and service costs. The higher the premium results from insurance company passing the costs on to false claims and fighting fraud, and that now becomes your problem as a policyholder where you've got to pay more premiums. Risk of non-compliance with policy terms and conditions. Non-disclosure refers to a situation where a proposer for insurance fails to reveal material facts when applying for insurance cover. Non-disclosure also is a form of on the insurer's part where terms and conditions of cover are not given to the client. A material fact is any information that would have influenced an underwriter's decision to either accept or decline cover and influences the number of premiums a client would have had to pay had the material fact been disclosed. Material facts also influence the terms and the conditions on the policy. Therefore, the material non-disclosure have been complied the insurer or the insurer's proposer to enter into the insurance contract on the terms it did when it would not have done so if it was not misled. So be honest when you apply for your insurance product. Right, the general risks associating with investing, purchasing or transacting in life policies. The risk of non-compliance with policy terms and conditions. The consequence for the insurer are as follows. It can be fined. It can be sued. Their license can be suspended. They can suffer reputational risk and then obviously also suffer loss of market share. On the insured side, benefits can be forfeited, the policy can be cancelled, you can be blacklisted, so next time you want to take out insurance you might not get it, and the claim might also be repudiated or turned away. Right, the impact of exclusions on life policies. Exclusions refers to an event that is not covered in a life policy. Exclusions are necessary as they help control the type of risk an insurer accepts. They help protect the insurer pool of funds by ensuring that the participants in the pool are made up of clients that an insurer with present standards of risk can profit from since they are a business. Some of the reasons for exclusions are a potential loss could be catastrophic, like a pandemic like COVID-19 or a war. So they would tend to exclude this from the policy. It's covered elsewhere where on travel risk, covered in a travel insurance policy or by a non-life insurer, or it is easy to control. If it's an illegal activity, obviously we're going to exclude it because you are a person who murder for hire, and you're a sniper, and you're going to get killed somewhere. Exclusions must be in plain, clear language and should be explained to the policyholder at the beginning of the contractual relationship. Failure to do so may prejudice the insurer and they could find themselves paying the risk they would not have normally paid for. The insured exclusion may present huge financial hiccups, especially when the insured does not have the money to pay for a life event that they are going through. So beware of this. Right, common exclusions in the long-term insurance industry. There are two kinds of exclusions: general exclusions that apply to all similar policies, and specific exclusions that apply only to specific policies or policyholders in some cases. Please see the excerpts from One Life Insurance in your study material. Right, the appropriateness of life risk products for different types of clients or groups of clients. If one has dependents, should an unforeseen event happen to give them financial peace, that's why you would take it out. If you have a mortgage with a bank, they can then cede the policy to the bank as collateral until all the payments has been made, and the policy will then pay the bank back, and they don't have to put your family out of the house. If one has a spouse who will not be able to provide for themselves or provide for the kids, and cover any accumulated debts as a couple, if one should die or be occupationally unable to work, that would help if you've got a policy. Life policies are unnecessary for older people. Some may want to hold onto them to settle debt of the estate. Life policies may also be purchased for a small business owner, where they cover the life of another partner so that they can benefit from the policy proceeds should the partner die unexpectedly. The proceeds then may be used to settle debts that accrued in the business when both partners were alive and keep the business afloat for some time. Right, accidental cover is useful as a supplementary cover for medical aid or medical insurance. It will also be suitable for a client depending on their occupation or hazardous or dangerous. The disease cover is important for those concerned about their health and the chances of contracting a rare disease, especially when a close family member dies or has one of the diseases. Income protector insurance will cover members in volatile jobs, industries, or those concerned about the state of the economy or worried about retrenchments. It can also appeal to a client whose jobs or hobbies are dangerous and they are likely to leave themselves disabled. Right, and the final one here that we look at is disability policies, which also appeals to those that are worried about their lifestyle adjustments and what will happen in the case of a disability event. Thank you so much for attending this part of the session. We're going to move on to the next part, which will be Unit 2.3, where we will discuss life investment policies.